Bond yields are falling, but is the sky? Stocks have another sell-off, but is it the big one? A new space race is on, and we're about to inject rocks to help solve climate change. This is episode 125 of Bizarro World, and I, again, am your solo host, Nick Hodge. We're going to talk about the markets to kick off this week. Another, what has become seemingly a monthly sell-off has started to occur here in July. Second week in July, S&P was selling off, and more importantly, this time that was accompanied by a dip in bond yields, more specifically a dip in the 10-year U.S. yield to its support line at 1.3%. And so if we talk about key indicators, which we do on this podcast and in the letters we write, certainly bond yields are one of them. The bond market is a giant market, and it, along with currencies, dictate a lot of other things that happen. And so if we've been looking each month since January, when we've had a little bit of sell-off in the stock market, is this the big one, or is this the turning of the cycle? We've been looking to bond yields to say, no, it's not quite it yet. But this time we can't say that because bond yields are, they're falling. They're right at support, 1.3% on the U.S. 10-year, like I said. So let's look at a couple of other things to get some other clues on if this might be the end of the bull run for stocks and time for maybe gold to start perking back up. So is it really a change of cycle, or is it just another monthly pullback, I guess, is the question at hand. Oil and copper is still relatively strong, not in danger of breaking their recent bull market trends, and the VIX not elevated enough to make me worry about continued stock market volatility. Gold is saying it's not quite time yet either for it to rise. It would need to go north of something like 1850, and it's in the low 1800s as I speak into this microphone. But real estate does say it's coming. So you've had a bit of rotation in the stock market of sectors that are performing the best, namely defensive sectors like real estate and utilities starting to do a bit better, maybe not breaking out yet or outperforming, but certainly looking like they are ready to do better than they have been lately. And that points to the cycle starting to change. So a bit of mixed signals there. I would add that it's, the middle of July. It's light volume. Gerardo's not here. I'm headed for vacation as soon as I press the stop recording button on this podcast, and I'll be gone for nearly a week. So you have to take some of these signals with a grain of salt, but nonetheless, the pulling back of rates to its resistance line or its support at 1.3 should make you perk up a little bit from your book on the beach. And let me talk about, real estate a little bit longer, making a recommendation in the real estate sector. Speaking of getting a little bit defensive in my monthly letter, Foundational Profits. And we would do that by buying either like a sector ETF, like XLRE, or we would do that by buying like a large REIT or an ETF that tracked a particular sector of the REIT market. And so that's what that monthly letter, Foundational Profits, is all about. Those bigger things, harnessing the trends. Because if you can get those bigger things right, then you can operate within those cycles or within those trends to affect different investment strategies, which is something you might have heard me talk about before. And real estate's a perfect example. You can do it with any sector, but you can invest in real estate in many ways. You can obviously buy real estate, commercial or residential, or you can invest in different sectors of the real estate market, right? Residential REITs, apartment REITs, commercial REITs, industrial REITs, even very specific REITs to a sector, or companies that are specific to a sector that operate as a REIT, like Industrial Innovations, for example, in the cannabis space. Or specific REITs that cater to certain sectors of the residential housing market, like high-end housing, or apartments, or modular housing, or even RV parks and marinas, for example. So you can invest in those in big ETFs or funds or REITs. So you can also invest in individual companies that operate in the real estate space, or you can speculate on smaller companies also operating in the real estate or property tech space, which is something you might have heard me and Gerardo talk about, prop tech, which is something I've speculated on as well. And so when it comes to sectors, getting the big direction is right. That's where the saying, the trend is your friend, comes from. If you can get the trend right, you can get a lot of other things right as you drill down on it and take on more risk along the way, because you have the direction of the bigger trend, or the bigger cycle, or the bigger sector right. And so I'm going to talk a little bit about how I do that in individual sectors, or have done that in individual sectors. But first, a note on transitory inflation, because I've been seeing lots of articles about lumber prices falling, but I haven't been seeing lots of articles in the mainstream media about real estate prices falling, or copper prices falling, or oil prices falling, because they haven't been falling, at least, not enough to necessitate a correction, or to write an article to point and say, see, the inflation is transitory, because it's not. And to that effect, a couple of points or things to point to, perhaps. One, there's a big article in NPR this week, public radio, about shrinkflation. It's cute that they come up with a funny, cute, funsy little name for it, instead of outright calling it what it is, which is inflation, or stealing your purchasing power, or robbing dollars from you. They call it a shrinkflation, and this, let's call it an expose that NPR put out. And it was about stuff that I've been talking about for years. It was about how consumer companies shrink the size of packages. This is where Gerardo would make a joke. And I was in the pool and charge the same price. So you get less for the same amount of dollars. Their unit cost stays the same, but you get less for your money. And so that's shrinkflation, but it's really just inflation by another name. And they were citing things like General Mills cereal giving you a couple fractions of an ounce less, or maybe even more than an ounce less, in a box of family-sized cereal. But there's countless examples like that across the board. One I was citing years ago was the amount of wood pulp they put in quote unquote grated Parmesan, like Kraft cheese, for example, and how they face lawsuits for the amount of wood, literally wood pulp, that they put in the cheese. I know it's used as a drying agent, but the amount that they were putting in it was, so that they were giving you less cheese and more wood. And there's another joke for you. And so all that to say that this inflation, I don't believe is transitory. I've said that before, but if you think they're going to increase the size of the cereal boxes to negate the shrinkflation when prices come down, then I've got a bridge to sell you. And so the last thing on inflation is, it doesn't matter if it's transitory or not. If the inflation persists, but the growth slows, we're going to have bigger problems. And that speaks to the rates. The bond yields starting to fall. That's the market saying, hey, we don't believe that this growth coming out of the backside of this, forced recession and lockdown and pandemic is going to be enough to cover the inflation that the governments and quasi-government entities like the Federal Reserve created by printing so much money and sending out so much stimulus. So it remains to be seen. That's what I'm keeping my eye on in the market. And so a couple examples of individual sectors and how my various publications and strategies, harness their upside when the cycle is in their favor. So I guess let's start with the biotech sector, for example, where you could invest again in a sector fund or ETF, or an individual biotech or pharmaceutical company, which I've done, even like a Walgreens, for example. And then you can go all the way down to, and that would be in something like foundational profits, and then all the way, to Hodge Family Office doing private placements and private deals in something like Immunoprecise, where we financed it at $1.50, and then it ran to $26 last year as it discovered, COVID neutralizing antibodies, and put us up something like 1,665%. And then in between is something like, Family Office Advantage, where once a company like an Immunoprecise IPOs or lists, I cover it, not all the time, of course, if it meets the investment criteria. I recommend it in that speculative newsletter once it's able to be purchased in the open market by all investors and not just accredited investors. So in that way, from funds in a monthly letter to speculative investments in a weekly letter to private placements just for accredited investors or strategic investors or high net worth investors, covering the entire spectrum of the market, the same way I do with my own capital, and oftentimes writing checks into the same private deals and owning shares in the same companies, recommending in the letter. Another example, I guess, to keep going down the list is in the uranium space, like in Azarga Uranium, for example, which we financed years ago privately. In fact, not even Azarga. We financed a company called URZ Energy, which was ultimately acquired by Azarga, or then again, investing in a fund like the Global X Uranium ETF, which we're in foundational profits. So, the full spectrum there in the uranium market, or in the copper market, something like, and we've talked about this a lot, Akucho Copper, which we financed at, let me see what the actual number is. I believe it was 20 cents. That's right, 20 cents with warrants at 30 cents. And Cucho is a stock that is approaching feasibility for a copper project when copper is over $4. Has the support of Wheaton, and shares were hitting new 52-week highs this week at 90 cents. So, putting us up well over 300% there on Cucho Copper, with warrants to buy more at 30 cents. And so, and then on the bigger side, owning names like Ivanhoe or Rio Tinto, which again, we've done in foundational profits, and going on to not just finance Cucho privately, but then recommending it in Family Office Advantage, and those readers, those premium readers, benefiting from it going to 90 cents as well. So having success financing it privately, having warrants to buy more, and then recommending it once it's a publicly traded company to harness the upside of copper with a bit of torque as a speculation that anyone can buy because it's then traded. So that would be in Family Office Advantage. Or a couple more quick examples. Real estate, which I just said was getting hot, and I was starting to look at as a defensive play, but which has been hot from a housing price perspective and a property tech deal perspective, and have benefited from that as well, not only as a real estate owner, but from recommending REITs, like I said, and also by financing companies like Resas, for example, which is a property tech company that operates a platform that has something like 500,000 real estate agents a part of it. So they can share leads and settle deals and get their commissions. And it's all tracked within a platform that now a significant portion of the real estate agents in the country have joined. And we've been up more than 700% on our 20-cent financing and Resas, and we're up that same amount on our warrants because we had warrants at the same price, 20 cents. And so that's a company that still has legs. A gentleman just joined the board named Randall Miles, who was also the vice chairman of a company called EXP World Holdings that went up something like 20,000% or more. And so he's now on the board of Resas. And I've done this in tech. Of course, I've done this in lithium and gold, and continue to do it across my different publications. And, one of the big ideas we've started to talk about, or at least I've started to talk about, is the space race that's emerging. And it's perfect timing because you've got Richard Branson about to go with Virgin Galactic, and then you've got Jeff Bezos about to go. Jeff Bezos even stepping down as the CEO of Amazon to go to space. And I've been speculating or postulating that one of the reasons these billionaires want to go to space is to pursue or to harness some of the goods that space has to offer, and to exploit some of the things we can do in space. I've mentioned things like, low Earth or low orbit satellites like Starlink. It's no secret. But what's a bit more murky is the narrative around, why these billionaires are going. People are saying, they're fleeing the Earth. They're going to go live on Mars or the moon without us. I think more they're using space as a tool to find things, investigate things, and study things that can help us here on Earth, either processes that occur in space or resources that occur in space, like minerals and gases, for example. And so one of the things you're going to be hearing more about from me is the concept of star gas, which is essentially helium that can be used for fusion. Because if we're going to solve some of the big problems that the Earth is facing, I think we're going to have to go after some real big solutions. And this is something longtime readers would have heard me talk about as well, railing against things like solar roads, or what's one I've heard recently, covering canals with solar panels, things that are very inefficient, expensive, and don't do enough to truly combat the problem. Outside of an all of the above approach for energy generation and efficiency, we're going to have to literally take some moonshots to meet our climate and energy goals for a growing and even food goals, really, for a growing global population. And so one of the things is fusion, but like I said, in star gas or helium in a certain form helps do that. But helium here on Earth in a different form helps with many other things. And the price of it has been rising fast because the U.S. government sold off the reserve and the U.S. helium reserve. And the price has gone up from something like $100 per 1,000 cubic feet to $300 to $700 in the past couple of years. And many of the resource companies that are pursuing new helium discoveries have done quite well in the market, many of them going up at least 3,000%. And so I financed a private helium company a while ago, and so did readers of Hodge Family Office. It is recently IPO'd, and it's currently drilling what I think is going to be one of the first reserves or resources that a junior company brings to market. They plan to have 2 wells drilled this summer. They'll spud. The first one's already been spud. The second one after the first one reaches terminal depth, and then they'll production test those, build a pilot plant, and they already have an agreement in place with an off-taker. And so over the coming days and weeks, you'll be hearing much more about Stargas for me as an investment theme. And I encourage you to think more about, big moonshot ideas to solve some of our problems. Not just like fusion, but like this next one I'm going to talk about and wrap up on this week. So for a while, I had done a positive story at the end of the podcast and got away for that from a bit because we've done a bit more loose format. And I've also called out a lot of what I think are dumb ideas. Like I just said, like solar roads, for example, and covering a road with solar panels never made a lot of sense to me. And it took a lot of smart people a long time to figure that out. But when I see a good idea, I like to highlight that as well. And so I saw this idea, and it speaks to, again, one of those big ideas that we're going to need. And this one is about how to, instead of generate our clean energy, generate our way out of this, how to just take the CO2 and get rid of it. So you might have heard about people offering prizes for things that can suck CO2 out of the atmosphere. I've been an advocate of just, planting trees and avoiding deforestation is a big way to get carbon out of the atmosphere. But this one that I was reading about in the past week is a little bit different. So it's about this type of rock or mineral called peridotite. And when rain contacts the mineral, it pulls in oxygen and carbon dioxide from the atmosphere. So in Oman, out to the east of Saudi Arabia, there's a lot of exposed outcrops of this rock or this mineral, rocks that have a lot of this mineral in it. And when it rains on them, they're petrifying up to 100,000 metric tons of carbon dioxide per year. And you got to get out your calculator because Oman has 15,000 cubic kilometers of the rock. And if we were able to drill, I know an industry that does this, that drills into rocks. If we could drill into the rock and pump in water that was saturated with CO2, then we could sequester the CO2 in the rock. And so instead of, like in a cavern or storing it somewhere else, which you might have heard as another idea, like carbon sequestration, this literally petrifies the CO2 so it can't escape back into the atmosphere. And I think that's a pretty good idea. There's enough of this mineral worldwide in rock formations, not only in Oman, but in Alaska and Canada and California and New Zealand and Japan. It's estimated, it could store 60 to 600 trillion tons of CO2 this way, or up to 250 times the amount of CO2 ever emitted by humans since 1850. So that's quite a long time ago. That's all the CO2 we've ever emitted we could store in these rocks. And so the article I saw was in Scientific American. If you Google peridotite or Oman carbon storage or something like that, you'll find it. But I thought that was quite an interesting idea, and in the realm of how we need to think about sort of the problems that humanity is facing. And some of them are going to be quite profitable, like the Stargas, as I mentioned. That's going to do it for episode 125 of Bizarro World. I'm headed to the beach with my family. Gerardo is away with his family as well. We'll be back together, hopefully, next week to do a more thorough podcast and get back to some of the more Bizarro themed things that we often opine on. Have yourself a good week. It's episode 125 of Bizarro World.